Let's take a look at some charts on Zcash from this week's article on Brave New Coin. So it's a long article. It's got a lot into it. It's got Zcash drama and baggage, historically, kind of an interesting coin in the market. It's got a reverse ICO thing. It's got a little chit chat about privacy and regulation around privacy coins. You'll laugh, you'll cry, you'll question your existence in this community. But when we compare Zcash to all the other coins, it kind of sits in the middle of every metric. Now you can't see XMR and Grin. You can't see their on-chain volume or active addresses. I don't know why Zcash's on-chain volume is this high. I assume it has something to do with shielded addresses and the way the on-chain mixing or shielded address stuff works. You can see that although their transaction volume is super high relatively, their transactions per day are much lower than Dash. And Dash has mixing type stuff. That's why their active addresses are so high. So none of these are exactly related enough that you can compare them as apples to apples. They're just loosely related. I mean, Dash is a proof of work, proof of stake hybrid. Zcash is pure proof of work, not default privacy. XMR is default privacy. Decred is hybrid. Grin is default privacy. So they're all over the place as far as what you're looking at here. But if I look at the inflation rates of everything, and I included BTC on here just as like a benchmark, BTC's inflation is below 2% now. XMR's is 2.2%. And all these others have higher inflation than 4% basically. Whereas Zcash is a 30-something percent or 28% inflation rate. Now this is going to decrease with the halving in November. But I think it's hard for people to stomach long-term investing into a project that has this high of an inflation. Just in a vacuum, I would avoid Zcash for this reason, as far as a long-term buy and hold. I know they support investors or they support developers, which should happen. Developers should get paid very well, should make sure that the chain is continuing to innovate, being upgraded, that sort of thing. Secure, audited. But just in a vacuum looking at this, it's hard to want to buy Zcash and hold it, right? Like I'll buy lows, sell highs, whatever, but you're not going to want to hold this long term. Anything with a 30% inflation. I mean, the only thing higher is Grin, which I wouldn't hold long-term either with a 60% inflation. Now, there are people who are going to argue with me about that, but sorry, like I'm going to hold something that has a 1.8% inflation. If we look at the mining rewards as far as what's going to happen post-November 2020, ECC Electric Coin Company is going to get 7%, Zcash Foundation 5%, and then other grants and things 8%. So this isn't immediately sold on market, but it is used to finance and support development and whatnot, which again is fine if this is what the community voted on. It's just a weird incentive structure because you're paid in your own coin that you need to sell to pay people. So you're effectively creating this permanent selling pressure. Not that proof of work mining just isn't permanent selling pressure anyway, because it pretty much is, but it's a weird situation. And that's for every proof of work coin. Zcash more specifically because the inflation is so high. If we look at the transactions per day and shielded transactions, this is straight off the Zcash, one of the Zcash websites. And the blue is the shielded transactions, which are low. Now, I don't know if this is just sapling or the other stuff. You know, that's the other issue with Zcash. There's been so many different protocol changes and iterations, which is great, but it's hard to track this and hard to compare it over time. It's even harder, I think, for the general person to understand how to use this stuff. Most of crypto is just generally just hobbyist things. And I think when you're asking people to use shielded or non-shielded addresses, people can get in the weeds with that. And it's not available on exchanges. And the ZEC people can argue with me that it's because people haven't asked for it on exchanges, whereas I'm going to say exchanges aren't going to add it ever because of regulatory reasons. I mean, look at Monero. No one's listing Monero. No one plans to list Monero. It's been talked about. It's been discussed, but it's not happening. When you have a chain analysis company saying that Zcash and Dash are whatever approval rating, to me, they're not privacy coins. If you can analyze where they're coming from, they're not privacy coins. There's a reason Hamas is using Monero and not Zcash. Okay, like it's not great, obviously, that terrorists are using Monero and Bitcoin, but there's a reason they're not using other stuff. If we look at transactions per day, I mean transaction sizes. Transaction sizes are up. Transaction counts are up. Now, I don't know why this chart looks so much different than this one. And I don't know where this data comes from. I just trust Coinmetrics data more than I do other sites, just because they're reliable. But this actually looks more bullish than even the Zcash site looked as far as transactions per day. I mean, you're seeing this lift since January. You're seeing transaction sizes increasing. This is kind of a product of price as well, both of these together. So this is definitely more bullish than it has been probably since mid 2019. Definitely looks like people are using it again for whatever reason, including speculation. If we look at block sizes and fees, it kind of says to me that no one's really using it. I'll say it like this. There's a lot of empty space being unused right now. You can see some of this trimming was just scaling, and it'll continue to scale. It'll continue to improve what's needed for block size and shielded and unshielded addresses and whatnot. But at the end of the day, if block sizes aren't increasing over time or following price or anything, to me it just says there's a lot of unused space and there's little on-chain demand. If you look at fees tell the same story. Fees are really low, which is good, but it also says that the on-chain demand is just not there. If you look at the active addresses, they are up over the past few months. This doesn't include shielded addresses. It's hard to know, right? It's like you're looking at Monero, you're looking for Monero's active addresses and you can't find it, whereas this is like falsely showing you that active addresses have died off to nothing and are slightly increasing again. So it's hard to even take this active address value seriously. If you look at the moving average for NVT, which is an inverse metric of economic utility, this also doesn't include shielded on-chain volume, I don't think. But to see on-chain volume rise and stay high like it is, and then to see NVT this high. So if NVT is rising, we're bearish because it says the market cap is overpriced compared to on-chain activity. So it's in the middle of the historic, upper middle, let's say upper third of the historic range. It's hard to get excited about wanting to buy in a vacuum when the Zcash MVRV or NVT looks like it does, or for any coin. It's not just Zcash. And if we look at the MVRV, which is the fill here, what I generally look for is what are the highs? What do the all-time highs look like? What do the local highs look like as far as using these on-chain metrics? So anything close to 1 or higher tends to be in overbought territory. You can see it can surge to 2.6 or whatever, and price can keep going. But anything over 1 for Zcash looks like be careful territory. So it's getting there now. So between MVRV and MVT, that tells me the on-chain stuff says we're definitely softening here with the bullish momentum. Another thing I'd watch for is if we do get a higher high like we did here, watch for MVRV because you could get a bearish divergence here. Now I don't look at this frequently as far as looking for bullish or bearish divergences on-chain metrics, but it's definitely useful. If you get a higher high with less on-chain activity, that just should be bearish in a vacuum for anything, not just Zcash. If we look at the proof of work side, there was an ASIC released within the last couple months. Now, Bitmain's had a lot of drama with shipments and politics at the company, so I don't know how far and wide this release actually is, but it's absolutely killing it as far as what the other miners are bringing in, right? Like, this is just going to eat the world. If this is real and widely available, Zcash Hashrate should just mega moon, kind of regardless of price, because it's so profitable at scale. It's just nuts. The ROI is quick. The risk is lower. If I was an ASIC person, this would just be, like a neon sign saying, where can I get these sort of thing. But like I said, Bitmain's got drama. I don't know if this is real, whatever. If we look at the hash rate and difficulty dropped late last year from a block time adjustment, I think. So that's why that looks like the way it looks. Hash rate, though, continues to just increase. And it's just slowly making highs every couple months, new all-time highs. I assume part of this is what I was discussing about this ASIC, is that as these miners get shipped and just produced and moved onto the chain, you'll see these surges in hash rate. So this is probably this ASIC eating the smaller ASICs. So hash rate will increase and then the smaller ASICs will die off, and then more of these ASICs get shipped, and it goes on and on and on. You can look at something called the nounces, Nounces, of the chain to sort of see which ASICs are actually mining the chain, if the ASIC has like a footprint or a fingerprint. So that's interesting. I haven't seen that yet, but Coinmetrics does that data as well. If you look at Google Trends for Zcash, they're basically just sitting kind of near all-time lows over the past couple of months. It's certainly increased relatively over the past year and a half, right? Like there's some excitement about Zcash out there organically, definitely. If you look at technicals, long shorts on Bitfinex, it's interesting that longs continue to decline ever since mid last year. It's like they got built up. Now they're just unwinding. Don't really see that anywhere else. So I don't really know what that's about. Looking at the 50 and the 200, VPVR, yearly pivots, volume, RSI. No real bullish or bearish divergences here. RSI kind of reset back to 50, which is good for momentum. If I'm a buyer of Zcash, I'm looking at a target between 55, 66. I mean, look at all this confluence here. There's VPVR, yearly pivot, 200-day EMA. All this is a soft landing for any potential price reversal. It's unsurprising that it got rejected at the yearly pivot. You typically see that because it's such a strong support resistance level. So if there's not just insane momentum into a yearly pivot or to a yearly pivot, you're going to see a price reversal. As far as the upside is concerned, there's no real resistance on VPVR until 240. Lots of pivots on the way up. It's a local high at whatever this is, 150, something like that. But all in all, trend-wise, this actually looks pretty good. One thing I didn't include in the article is this harmonic. It's either a bat or a cipher. You can look it up. It's kind of hard to explain, but it's another type of chart pattern to look for. And Zcash did hit its potential reversal zone from that respect as well. I don't use them or talk about them too much just because I don't find them to be that reliable, but that's just more confluence that this needs to kind of just pull back a little bit and retrace. But I think the mid to long-term trend is definitely bullish here. It would have to break 55 dramatically for that to be all over. And if we look at the cloud, it's just been textbook Kumo breakout, trend takes off. I mean, it's been kind of a V-shaped recovery ever since the March low, but especially since the Kumo breakout, it's just really took off. And you can kind of see this harmonic better. One way to think about it is like a weirdly shaped W double bottom or M double top. This would be considered a bearish harmonic, even though it's sort of revisiting this high. And again, the expectation is just a retrace of some kind. Lastly, looking at ZEC PTC on Bitfinex, really the only thing I care about is where is it in the 200 EMA and where is it on this pitchfork. It's kind of just hugged this midline of this pitchfork historically. It's still inside of it. It's going to need to break 0.011 to really convincingly be out of this. Now that resistance level is going to continue to decline over time, but right now that's where it's sitting. RSI is also reset to 50. Tons of volume support here at these lows, so I don't really expect it to make a new all-time low anytime soon. It's got the pitchfork support, 200 support, cloud support. On the way up, it's got yearly pivot, not really any volume resistance. One thing that was interesting was the ZEC BTC longs opposed to the ZEC USD longs on Bitfinex continue to rise and are now at all-time highs. So I think based on on-chain data that is semi-reliable, considering the shielded stuff kind of obscures that data a little bit. On-chain stuff says it's a bit overbought. Technicals say mid to long-term trend is great for bulls. It just probably wants to chill out a little bit, return to the mean somewhere around 55 to 66.